Good morning. It is Monday, December 15th. I'm Vincent Fanvan, and this is Always Booked Live, your daily briefing for keeping your calendar and your pipeline always booked. On today's show, we're going to dive into 3 different stories that could reshape how you think about your business in 2026. Costco just posted record-breaking Q3 numbers that reveal what is actually working in consumer spending right now. We're going to break down the great wealth transfer, 124 trillion moving from millennials and Gen Z, and what it means as you serve your younger clients. And the U.S. U.K. trade deal just hit a wall over digital regulations. It's a wake-up call for anybody running an online service business. Plus, quick hits on SpaceX's $800 billion IPO prep, the AI bubble Wall Street's betting against, and more. But first, Costco just proved who's winning the consumer spending war, and it's not exactly who you think. So let's start with Costco, which just delivered a masterclass in reading the room. The warehouse giant posted Q1 fiscal 2026 estimates that blew past Wall Street's expectations, and the story behind the numbers reveals exactly where American consumers are putting their money right now and where they're not putting their money. Costco reported $67.3 billion in net sales for the quarter ending November 23rd. This is an 8.2% jump year over year, according to Reuters. Earnings per share came in at $4.50, well above the analyst's $4.40 expectation. But the real story is actually in the details. Same-store sales, excluding gas, climbed 6.4%, beating estimates of 5.82%. E-commerce sales surged 20.5% for the quarter, with Black Friday sales alone racking in $250 million in non-food online purchases. And according to the company CFO, Gary Millerchip told investors that website visits actually jumped 24% year over year, while app usage exploded. Their mobile app usage exploded by 48%. Same-day delivery through Instacart in the U.S. and Uber and DoorDash internationally grew even faster than overall digital sales. Now, Truist security analysts noted that Costco's heavy exposure to middle and upper class households, as well as its deep value proposition, are allowing the retailer to gain market share, even as inflation and sluggish labor market made shoppers more cautious. As Truist Security remarked in a research note, they said, quote, "We continue to believe that the company's heavy exposure to middle and upper income households and deep value proposition enable it to continue to gain market share." So what's the takeaway for service business owners? Here's what this means for your business. Consumers, even high income ones, are hunting for value, but they're still spending when the offer is compelling. If you're a local service business like a med spa, a fitness studio, a salon, you want to consider how you're packaging your offers. Can you bundle services together like Costco bundles products? Can you create a membership model that locks in predictable revenue while giving clients a reason to come back more often? For online service providers, coaches, course creators, agencies, Costco's digital explosion is your blueprint. Mobile app usage surged 48%. That's not a trend, that's a mandate. And if your clients are still toggling between your website, a booking link, an email thread, you're leaving money on the table. This is where a dedicated mobile app or a client portal tied to your CRM can replicate that friction-free experience that Costco is delivering. You want to make it stupid simple for clients to be able to book and rebook again and again and again. And so for B2B firms and consultancies, the takeaway is about more visibility and velocity. Costco's same-day delivery grew overall faster than e-commerce, and speed wins in today's market. If your proposals, if your contracts are stuck in email chains and you're slow, you need to automate what you can while centralizing client touch points to make it easy for decision makers to say yes without waiting 3 days for a callback. Speaking of money moving fast, there's a generational shift that is happening that dwarfs even Costco's numbers. Trillions are about to change hands, and it's already reshaping who your next clients are going to be. To 124 trillion is moving from millennials and Gen Z right now, but only if their parents actually have it. Now let's talk about the great wealth transfer, which is a term that you've probably heard thrown around before. But here's what's actually happening. Baby boomers and the silent generation are passing down an estimated $84 trillion in assets by 2045, with 16 trillion transferring in the next decade alone. And it's not just inheritance. It's happening right now through gifts, through trust, through early transfers. And this is according to the New York Times. By 2040, millennials and Gen Z will make up over a third of ultra wealthy population globally. And that's up from just 8% today. That's a seismic shift. So right now, baby boomers and the silent generation control over 2/3 of ultra high net worth wealth. In the next 15 years, their shares are going to shrink to just 1/5, with Gen X holding 45% and the younger generations catching up fast. But here's the catch, it's not universal. So as CNN Business reported, who will actually benefit from this is the real question. That transfer is heavily concentrated amongst family who already have wealth. And the New York Times highlighted families like that of a Miami millennial who noted, quote, sadly, my mother is barely making ends meet and is just one paycheck away from being able to cover her expenses. There's nothing to transfer. The UBS data shows that in 2025 alone, 91 heirs inherited a record 297 billion. This is a 36% increase from the prior year. But the survey also reveals that 55% of millennials and 41% of Gen Z expect to receive money or assets in the next 5 years. Younger, ultra wealthy individuals are also receiving their inheritances earlier, thanks to the rise of the family trust and the giving while alive strategies that have allowed the wealth before the parents pass away. Maheen Shabam, who's the director of research and analytics at Altrata, told Inside Wealth that this enables the younger generation to access their wealth sooner. They're not required to wait for the principals to pass away. Coming on today to talk about these trends and business is CEO and founder of Captive Demand, Spencer Donaldson, also the founder of FirstFuture.ai. Hey, Spencer, as we see this, like, how do you see this evolving the way that service business owners today need to adapt in the market to being able to serve these younger individuals who all of a sudden are coming across a life-changing amount of wealth?
Yeah, I mean, I think this generation is mostly focused more on experiences. So you're getting a large group of people who are going to be experience focused, and you're going to have to deliver on a much higher tier experience to be able to capture their interest. You need modern web experiences. You need new technology. A lot of these businesses that are lagging behind in that are going to find themselves losing in the long term, just because the people who are getting the money are going to be technically savvy. They're going to be expecting you to deliver on an experience that's much more luxury, especially as they're coming into new money. But also you want to remember that there's a large group of people that aren't getting that money. So you're going to have to segment your customers differently. Think about how you segment them, how you treat each one, have experiences if you're focused on the luxury group, and the other group, maybe figure out different price points and things you can do for them as well.
What's fascinating about this is that, if you run a traditional services firm, whether you're an accountant, whether you're an architect, whether you are a commercial real estate broker, you have processes that already work today. You have marketing and word of mouth referrals that already works today. And if your average client suddenly drops 20 years in age, you almost have to rework a lot of what you've already spent potentially a decade or more building.
Yeah, the whole infrastructure is different. I think a lot of it, I mean, I'm in the tech space, so I think about it technically, but I do think people technically think about things differently, and their expectations of service are completely different. Younger folks want things now. So if they have to wait to book a service, even 10 minutes, that's too long. So you got to be on top of all of your booking, on top of all of your technology, making sure that you're accessible on all platforms.
Yeah, let's talk about like how businesses are found. We've seen today that in Google searches, potentially 60 to 70% of Google searches are resulting in a no click. For anybody who's not a marketer, that basically means that 60 to 70% of Google searches are not resulting in a click out to a website. And so, I know a lot of businesses today where the only way to be able to book that appointment is by calling their phone number. It's a seismic shift to being able to allow self-service scheduling, but it's also a massive shift to take a look at, like, these are AI native individuals now that oftentimes like might be starting that search in a chat GPT and not even in a Google today to begin with. Like, what other types of things should these business owners be keeping in mind if they're a service business owner that needs to be able to adapt?
I tell everyone right now, focus on AEO. Like, there's a huge shift in SEO, but there's low hanging fruit on the AEO side. If you write your content correctly and set your schema up correctly, a lot of folks don't even have the ability, they don't know this, but they're blocking bots from hitting their website. Well, ChatGPT is sending bots to scrape your website. So the first thing you want to look at, are you even allowing ChatGPT and Claude and those AI search engines to hit your website? If you're not, you got to fix that. Like that's a day one thing that you have to think about. The other thing is just being more clear and being more answer specific in your content. So more like an FAQ. Here are the questions that are frequently asked, and here are the responses in bite-sized chunks. If you can do that, you're much more likely to rank in AI search, and you're going to be better off for that. So focus on that first, and then you'll be great. And it's pretty much the same principles as SEO. It's just changing the way you write the content a little bit.
Yeah, we've had frequently asked questions on the bottom of our website, I think since our very first version of a website, but it's almost kind of an afterthought for us where, it's the bottom of the page. How many people are even making it to the bottom of the page? Like what questions are actually on there and like how frequently do we actually update those? But I think, now with the answer engine optimization or this AEO that you're talking about, like that's the front door. And so, it was a big wake up call for us to take a look at. We record all of our calls with all our sales calls at our company are recorded. All of our client onboarding calls are recorded. And so, we had all of those transcripts and we were able to ask Gemini, like, hey, what are the top 75 questions that we get asked before somebody becomes one of our clients? And now the homepage of our website actually matches the top 10 questions that we actually get asked on sales calls. And because those are the questions that people are going to be asking AI. And, it used to be that the equation was you would do a search, you'd hit a website, and then maybe 5 to 10% of people would make it to the bottom of the page where your FAQ section is. But if you think about that as the front door before somebody even hits your website, you're going to put a lot more energy into that. And it was a big wake up call for us to do that. Is there anything else that we should be taking a look as we're, whether we're publishing content, whether we're making updates to our website, whether, it's some type of change that we may need to make in like the Google Business Manager?
Yeah, I mean, I think the biggest thing is just making sure that all your information accurate is your information for your business accurate across the web. We see this with a lot of businesses. They don't update all platforms. You want to make sure any listing sites, any sites that you're located on, that you have all the correct information, that there's no disparity there. Also making sure that you have your booking. The biggest thing, like we see a lot of folks not even putting their direct booking links with a booking button on their Google business profile. Do that because again, most people are not going to the site. How you want to think about this now is like you're writing it for people, but you're also writing it for the AI algorithms. They're going to rewrite your content anyways. So you have to answer the questions for them. But yeah, the biggest thing is just making sure your information is accurate across the web, or those are kind of the easiest things to do.
Yeah, that makes a ton of sense. Spencer Donaldson, thank you so much for joining us today. CEO and founder of Captive Demand and FirstFuture.ai. We'll see you back here tomorrow. So let's talk about what this means for service businesses. If you're targeting millennials and Gen Z, you need to understand that their spending power is growing, but even if it's not evenly distributed, high-ticket local services like IV therapy clinics, med spas, boutique fitness should double down on premium experiences for a subset of younger clients who now have liquidity. And if they're spending on real estate, luxury goods, and experiences, you want to position your experiences as more a part of that experiential lifestyle, not necessarily just a commodity. For online service providers, especially coaches, consultants, course creators, this generation is different. They prioritize flexibility. They prioritize digital first experiences. They prioritize transparency and authenticity. And they're not going to tolerate a clunky booking system or slow email responses. This is where a mobile app or a client portal or using an AI chatbots that consolidate everything and make it really streamlined becomes so important. That's scheduling, it's payments, it's communication, it's resources. You want this to become your competitive advantage. And it really signals if you're serious and if modern and if you're built for the way that these new individuals actually want to do business. B2B firms and agencies need to adjust their pitch as well. Younger decision makers, they expect data, they expect speed, and they expect alignment with their values. And if you're still leading with a 40 slide deck or a 2 2-week turnaround time, you're out of sync with where the market is going to be moving. You want to use automation, CRM-driven workflows to deliver proposals faster, track engagement in real time, and show ROI immediately. And if your services touch wealth management or real estate or estate planning, you want to position yourself as the bridge between generations, because right now that's where the money is moving. So today's show is brought to you by One. This is the AI native platform that turns your CRM and your tools into an already to use custom branded mobile app and client portal. If your clients are bouncing between booking links, emails, and DMs, One wraps that all into one place on their home screen so that they can book, rebook, and stay engaged without you chasing them. To see how this works for your business, check out Vyten.com. That's VYTEN.com and request your free app strategy session today. All right, let's wrap with a story that shows what happens when two governments can't agree on the rules of the digital economy. So the U.S. and the U.K. can't agree on digital trade, and this is something that should worry every single online business owner. And finally, the U.S.-U.K. trade deal, or what was supposed to become the trade deal, just hit a major snag. The two countries announced a framework back in May, but talks have really been stalled over disagreements about Britain's digital services tax and the broader digital regulations. That's according to the New York Times. The United States paused a tech-focused trade pledge with Britain due to broader disagreements about the UK's digital regulations and food safety rules. The deal was supposed to include an ambitious amount of digital trade provisions, but the US has been pushing the UK to drop its 2% digital tax on services revenue that American tech companies generate in the UK. And the UK has refused to do this, and now the entire digital trade component's kind of in limbo. So according to the CSIS, US companies export $68 billion in digital services annually to the United Kingdom, supporting over 1 million jobs in the US. And the digital trade agenda was supposed to address the free flow of data between the different markets, eliminating the UK's digital services tax and the harmonization of AI and quantum computing standards, and the new intellectual property protections in the digital environment. But none of that is really happening right now. The White House released a statement in May that outlined the priorities, including provisions on paperless trade, pre-arrival processing, digitized procedures. But without the agreement on taxation and regulation, those priorities remain theoretical. British officials say that the discussions will continue, but there's no time for a resolution anymore. So what are the takeaways for service business owners, and what's the so what? If you're running an online business, coaching, courses, remote agencies, SaaS, this is a reminder that the rules are still being written. Digital taxation, data privacy, and cross-border payments are all on the table. And the governments are really divided, and that creates risk. But it also creates opportunity. First, you want to diversify your client base geographically if you can, but understand that the compliance implications there. Data privacy laws like GDPR in Europe and varying state laws in the US mean that you need to know where your clients are and what rules apply. So if you're collecting payments internationally, you want to make sure that your payment processor handles currency conversion and tax compliance automatically. Second, you want to own your client relationships directly. If you're relying solely on third-party platforms like Zoom, Calendly, Stripe, social media, you're just one policy change away from disruption. A CRM-connected mobile app or a client portal gives you a direct channel for that control, regardless of what happens with trade deals or platform policies. For B2B service firms, especially those working with international clients, this can be a wake-up call. If digital service taxes spread to other countries, your pricing models may need to adjust. And so you want to build in the flexibility now. And if you're advising clients on tech adoption, AI, or digital transformation, you want to make sure that they understand the regulatory fragmentation is a feature. It's not a bug of the digital economy, because the firms that are going to win are going to be the ones that can adapt quickly without waiting for the governments to figure it out. SpaceX is about to become the most valuable private company in history, and it's hiring banks to take it publicly. So SpaceX has started on Wall Street a bake-off to hire investment banks for a potential IPO in 2026. That's according to the Wall Street Journal. The company is valued at $800 billion in ongoing share sales and could rise to more than $30 billion in an IPO, making it one of the largest in histories. For service businesses, this signals that even the biggest private companies are betting on public markets again, because liquidity is back. Investors are paying attention. If you're a B2B service firm or a consultant working with startups or growth stage companies, expect more demand for IPO readiness next year, financial modeling, merger and acquisition advisory, as this trend accelerates. Retail investors drove stocks to an all-time high, and Wall Street is quietly selling into the rally. Retail investors pushed the S&P 500 to a pre-Christmas all-time high, but institutional investors are selling into the rally. According to Fortune, this disconnect suggests that everyday investors are chasing momentum while Wall Street actually sees risk ahead. For service business owners, this is a reminder to stay disciplined with your cash management. If you're thinking about refinancing debt, locking in rates, or investing excess cash, now's the time to act before the sentiment changes. And if you advise clients on financial planning, helping them distinguish between market noise and long-term strategy becomes really important, because retail euphoria rarely ends well. Wall Street sees an AI bubble forming, and they're already betting on what pops it. Wall Street is bracing for an AI bubble, and with analysts openly discussing what might actually trigger a correction, Bloomberg and the Wall Street Journal are saying that AI spending concerns rattled tech stocks after Oracle, as well as Broadcom, disappointed investors, erasing $219 billion in market caps in a single day. So for service businesses, the lesson is pretty simple. Don't chase the hype. If you're investing in AI tools, focus on ROI, not necessarily the buzz. Can it actually automate a manual process? Can it actually improve client experiences? And if not, you might want to consider waiting. And if you're a consultant or an agency selling AI services, you need to position yourself as the skeptic who delivers results, not as the evangelist that's selling vaporware. Fifth Third Bank just partnered with Brex, bringing AI native finance tools to commercial clients, and traditional banks are scrambling to catch up. Fifth Third Bank partnered with Brex to offer AI native financial services to commercial clients, BPI Insights reported. And this is a part of a broader trend where banks are white labeling fintech solutions to compete with digital first challengers. For service businesses, this means that better tools are coming: smarter spend management, automated reconciliation, real-time cash flow visibility. If your bank's not offering this yet, you need to ask for it. And if you're a B2B service provider, you want to consider whether your tech stack is as modern as your clients' expectations. AI-powered tools aren't optional anymore. They're table stakes. That's it for Always Booked Live. I'm Vincent Fanvan. We're going to be back tomorrow with all the news and ideas that keep your calendar and your client relationships always booked. If you want to see what a Viton mobile app can do for your business, head over to Viton.com. That's VYTEN.com. Thanks for listening. We'll see you tomorrow.